A special shout out to all you new branch treasurers out there. It's, it can be confusing getting started, and just so happy that you've taken the job on. A treasurers can be one of the hardest positions to fill. We will, we received a lot of questions also from, with the survey we did. And so that also, made us decide to do this webinar, even though we'd done one last year, and make it an annual feature. There are many aspects to the job of a branch treasurer and becomes important for branch success. So in addition to keeping track of income and expenses, which everyone would expect, there is also the handling of membership dues and also accounting for fundraisers, such that the intent of the donor is honored, and your accounting makes sure that the funds are spent for the purpose for which they were raised. And then there's filing taxes properly. If it's not done for 3 years in a row, it can lead to the loss of tax exempt status. Next slide, please. Can I get the next slide, please? Okay, this webinar is aimed not only at branch treasurers, but will be helpful to many other positions on the board. It's important, I think the important thing to remember is that the entire board shares fiduciary responsibility for the branch. And so it is helpful to have some understanding of how branch finance works. Next slide, please. We are covering a wide range of topics that are needed for a branch treasurer. And we will be taking questions at several points in the presentation. So at the end of each major section, we received quite a few questions with the registration, and several of those are being addressed in the webinar. And we will try to answer questions that come up. If we're not able to get to them here, we will get in touch with you after the webinar. Next slide, please. Okay, so a few things to note. This webinar is based on a document. A special AUW branch treasurer's accounting guide has been created for you to help answer the many questions you may have. And it's developed as a reference. And what this webinar does is gives you a tour of that guide. The focus is on accounting concepts that you need. It is not related to any particular tool. So the ideas here can be applied to any software accounting tool that you may be using, like spreadsheets or Quicken or QuickBooks. Those are the most popular three that I used. Use what you need, because the branch needs differ. There are small branches, medium-sized branches, large branches, and their needs are all different. So some of you may find that some of the sections do not apply to you, and that's just fine. Also, treasurer skills differ. Some have accounting background, some do not. But I'd like to emphasize that it's not important it's not necessary, at least, to have an accounting background. I myself do not have an engineering and computer science background and hadn't done any accounting before. So don't be afraid if you don't have the accounting background. Next slide, please. So we have a great a cast of presenters here. They're very experienced because they've all gone through this experience of being new branch treasurers. We have Christine Ritter, president and past treasurer of Danville, Alamo, Walnut Creek, and her background is in engineering, and marketing. And we have Roberta Schmalz. She's past treasurer of Citrus Heights American River, the Char branch. And she is a professional tax accountant and a past CPA. Chris and Roberta have worked closely together in creating this guide, and they have put in a lot of hard work on it, and we hope you will find it very useful. They've been supported by Kathy Ford, the incoming treasurer of Beach Cities. She's also the chair of our investment committee. She's a professional accountant as well and a past CPA. And Barbara Spencer, who's the president and past treasurer of San Francisco branch. She is by profession a lawyer. And myself. So basically all of us have been meeting weekly for over 2 months and working on this guide. So now without further ado, let me transfer you to Chris and Roberta.
Hi, I'm Roberta, and I'd like to welcome you all. Rolly introduced to me as a tax accountant. Let's be real clear, I was an income tax accountant. And when I became treasurer, I had no clue how to account for a nonprofit. It's been an ongoing learning experience, believe me. We're going to use the workbook by focusing on 2 statements, the statement of activities and the statement of financial position. The statement of activities tells you how you did, how your branch did over a period of time. And the statement of financial position tells you where you're at a particular point in time. No debits and credits, yahoo. We're going to record transactions by increasing and decreasing accounts. And the increases will be in green, the decreases will be in red. And then depending on whether you're using accounting software, if you're not, you're going to need to recalculate some entries. Along the way, as we record transactions, we've got some checksums. We'll look at those more closely when we actually get into the numbers. Why are we doing all of this? Well, Raleigh just hit on it, but I think it's important to stress it. We want to make sure that the donor's money is going to where they expected it to go. We want to make sure that the branch has useful information to make good decisions. And we want to make sure that the bank agrees with us as far as what we've got. We're protecting the assets, if you will. So now let's switch to tab 2. And we'll look at these statements in a little more detail. So the statement of activities, remember, is how did you do over time? It can be a month, a year. It measures performance over time. The main categories are revenues, income, dollars in, if you will, and expenses, which is the money that flows out, money that's spent. Statement of activities in the corporate world or for-profit world would be the income statement. You're probably more familiar with that term, but here it's a statement of activities. And the statement of financial position, remember, that's where you're at any point in time, shows what assets you have, what you have, liabilities, what you owe, and the difference, which is net assets. And when we actually look at some of these statements, we'll dive into a little more detail. Below down here, there's suggestions for what accounts or categories you might have under these different headings. I think the most meaningful thing is that you want to make your categories meaningful to the branch. What does the board need to know? You also need to pay attention to what does the government want to know and make sure that you've got categories that include that information. Chris, where do we start?
Okay. Well, let's have a look at tab 3. So we arranged this workbook so that it steps you through your year. So as a new treasurer, this is what you'll see when you start your job. If you look over here, we've got these are real examples of what Roberta was talking about. Here's the statement of activities over here on the left side. And that's all about what activities are you going to do this year. So on the things you would look for there are all the income you're expecting to get. So you're going to have some dues, some member events, maybe some directory advertising income. And then you're also going to raise money for your projects, maybe for Tech Track, local scholarships, if you're going to have a raffle. And so you'll generate some revenues during the year. And this is where you record them. And you'll notice that so far we don't have anything here because we haven't done anything yet. This really starts out as your budget. So here are the figures that your board put together for you last year to tell you to really it's a financial description of the plan for the branch for the year. So this just takes all the activities that you want to do and assigns how much money is going to come in for them and how much money will it cost you? What are the expenses? So if we take a look at the expenses, you have operating expenses, which are those expenses that you need just to run your branch, not related to fundraising. So that's something like if you have a member event where you don't raise money for a cause, administrative expenses, directory expense to print it and so forth. Then you have project expenses, which are of two kinds. One is the expenses that you incur in order to run a fundraiser. So if you have a dinner and you provide a meal and the difference between the ticket and the meal is going to go to your fund, then that would be your fundraising expense, the meal cost. So then that's associated with a particular project that you might support. Maybe it supports Tech Track, maybe local scholarships, maybe AAUW fund, could be any of your projects. Then lastly, you also have expenditures when you actually award the money to your fund, to the beneficiary. So when you actually write the checks for the local scholarships to your scholars, for example, that money would be recorded here. So this example budget is grossly simplified compared to what you will really have because you'll have many more different income and expense accounts. But we wanted to keep it simple so you could follow the concepts of the transaction. So this example shows total revenues of $20,880, expenses of $15,650. So our final earnings for the year, that is to say in nonprofit language, excess revenues over expenses, also known as net profit in the business world, is $5,230 for the year. So I think most people have a pretty good handle on that. It's how much do you take in minus how much do you expend, that's your net. Over here, the statement of financial position is something you may not be as familiar with. This is similar to a balance sheet in the for-profit world. But as Roberta explained, that has a couple of sections. There's the assets, which is what you have. So this is where you keep track of how much money is your checking account? What's in your savings? What have you actually used some of this money to buy basically a deposit in a venue? So in this case, this branch made a deposit on a venue because they're going to have a big meeting next year. So this activity is going to happen in the following year. It doesn't belong on our statement activities for this year, but last year they made a deposit for something that's going to happen this year. So when it actually happens, it'll move over into the statement of activities. Liabilities contain current liabilities and deferred income. So current liabilities are pass-through amounts that you owe someone else. So when someone pays your branch for their state dues, it's not income to your branch. It's simply a pass-through. It goes into your liability account shown here, and then you'll pay it back to the state immediately. So normally these accounts will be zero, but it's a good checkpoint so that you know that the money came into your account and you paid it out appropriately. The other thing you'll have here in liabilities is deferred income. And this happens with most branches because if all your members are paying dues early, so hopefully most of your members paid your dues for next year already, those are not those memberships belong to next year, not this year. So you want to keep them over here in the deferred branch dues income until the year begins. The other category that we have is net assets, and those are of two types, restricted and unrestricted. And we'll see exactly how this works a little bit later. But the idea is that here's where you keep a running balance of how much you have earned that is dedicated to Tech Trek, local scholarships, and any other projects that you may have. And then if you just earn money, for example, that goes to the normal branch operations, that will appear in the unrestricted net assets. So that's a lot to think about, but a simplified way of thinking about that is the statement of financial position again, as Roberta said, is how much you have and how much you owe at a particular point in time. So it's just assets are everything you have, liabilities are what you owe, and net assets are the difference, or net assets plus your liabilities are going to equal your total assets. So the net assets, another way of thinking about that is how much, what are the cumulative earnings of your branch over time? And we'll see that put into practice in a little bit. So now we have our budget. Here we go. We know how much is in the checkbook. We know we've got a deposit we get to spend this year. We know we've got some prepaid member dues that we're going to take into income right away as soon as the year starts. And we've got $500 that we can give to our Tech Trek campers. And we've got $11,500 in unrestricted net assets, which represents earnings of our branch over time that our board can invest as they see fit. So now, Roberta, what do we do? What happens next?
Well, our very first entry on tab 4.
Oops, sorry, I went the wrong way.
Tab 4.
Here we go, sorry.
Here we are. Our very first entry is that the $2,000 that we accumulated in March through June, it's now July 1st of 2021. And think of the statement of activities as running from July 1st, 21 to June 30, 22. Might be helpful to just jot that down. So these are the dues that we are now going to deliver memberships for. So we are going to decrease, remember red, decrease deferred branch dues income and its income for this year. So we're going to increase branch dues income. If you're using Quicken or QuickBooks, the rest of this is going to kind of happen automatically. If you're not, you're using spreadsheets, notice that your total revenues, I'm not moving the hand.
No, you're not. Can you?
That's okay. I'll just talk through it.
I'll point at what you're saying. Okay, total revenues.
Total revenues less total expenses, excess revenues over expenses in nonprofit language is 2,000. And you need to increase your unrestricted net assets because that's money that the branch has now to spend on something by $2,000. So let's go over those checksums that I promised you. And you look at the first checksum and it says excess revenues over expenses equals total revenues less total expenses. Bingo, it does. 2,000 minus 0 equals 2,000. The next one is excess of revenues over expenses equal change in total net assets. And $2,000 in excess revenue over expense equals the increase in unrestricted net assets. And then the final one that you should do every time you post something or record something is total assets better equal total liabilities and net assets. So 14,000 assets, 14,000 in total liabilities and net assets. We have recorded this correctly. So the next thing that's going to happen is we're going to get some dues in July. And Chris is going to tell us how we handle bank deposits and bank withdrawals to start processing the money.
Okay, so this is a lot to look at. So I don't try to read this. All that is on the right is an example of work instructions for processing deposits and payments. This happens to be one that we use in our branch, but your branch will probably have its own work instructions. So I'm just going to talk about the concepts here mostly. Most of your work when you're a treasurer is making deposits and writing checks to pay people. So that's very much like running your own checkbook. You write down in your checkbook either an increase or a decrease, and you keep a running balance. But what's different here is for each of these transactions, you need to record either a proper activity that's associated with it. So you have to choose one of these accounts from your chart of accounts. Usually if it's income, if somebody gives you money, it's going to be, if it's for an activity that's this year, you're going to choose an account from the revenue accounts. If it's money coming in, but it's an activity for next year, then you're going to choose one from the the statement of financial activities. Conversely, if you get pay money out, then you're most likely, if it's for this year, you're going to choose an account from the expenses on the statement of activities. And if it's for next year, you're going to, let's see, prepaid, you're going to, which way is that? You're going to choose a liability or an asset. That's going to be an asset for next year. You're going to choose one of the asset accounts for that. So that's one of the things I find a little confusing, but you'll get used to it. So let's talk about deposits and payments, the two kinds of transactions. Deposits are really just like when you make your deposit with your checkbook, as we said, you're going to get, there's three different ways you could get money. One is you could get a check. Somebody could give you a check, in which case you just endorse it, copy it, make sure that you write down what it's for, because you're going to have to assign a code to it, an account to it. And then be sure to keep your deposit slip. So keep all the documentation that has to do with your deposits. You also could get, for a deposit, a PayPal transfer if you're using that. So whoever's managing your PayPal account will transfer money into your bank account periodically. Just make sure they tell you what exactly this money is for so that you can record it properly in the right categories. And then also you'll get direct deposits into your bank account from AAUW National. And this will be for actually dues for your branch. And Roberta will show you an example of that later. So again, the key is just document everything, write everything down, and I keep it in a binder, or you can keep it electronically, whatever works for you. So let's talk about payments a little bit. Payments, the same advice applies. Make darn sure that you keep every bit of paper associated with the payments, all the invoices, any receipts that you get. If you write a check for a payment, write the check number on your invoice so that you know, can match up what check you wrote to pay what. So you're going to get two ways that you're going to have documentation for payments, or two types of payments. One is you could get an invoice from a vendor to your branch. For example, I get printer invoices all the time, and I know that it's okay to, pay them $12 to print the few copies of our newsletter that we print. So I just pay it and write the check number on it and code it properly. But you'll also get expense reimbursement requests from members. So when they've worked on a project and they have to make buy things for the project and they want to get reimbursed, then they're going to need to fill out something like you see on the left here, an expense reimbursement request. And this will help you make sure that everything is kosher, because it's going to say who's it's paid to, what date it was spent, and then you're going to enter the proper category that it belongs to, the description of the amount of the expense and the amount. And then it'll be signed by the requester and also approved by somebody. So who's ever the chair for the project needs to approve it. And your branch will have different rules about approving expenses. So check your policies and procedures. The other thing to do is make your job as the treasurer to make sure it's within your budget that the board approved. So if it's beyond the budget, you need to say, gosh, I need to get an exception on this, and then you can pay it. So those are the real differences with the payments, is you have to make sure it's in budget and it's approved expense. So now that we know all about that, Roberta, let's hear how you can process some dues payments when someone writes you a check for their dues. And let me see if I can give you the remote control properly this time. I just gave it to you. I'm
Okay.
Good. Can you click and take it over? Oh, you got it.
Yeah, I got it. Thank you.
Thank you.
So it's July, and somebody just gave us a check for $103 for dues. The first step is to go to the member services database, and I'm not going to go into any detail on this because the system is changing, but it's pretty easy. You find your member, you click on the member, up pops renew member. In this case, Amelia Earhart owes us $103. Luckily, the check is for the same amount. So we are going to renew her membership on the MSD. But we have to do something with our books, our records. So we have $103. We're going to increase cash because we're going to put it into the bank following the procedures that Chris just talked about. We're going to increase our dues. Our share of the $103 is $21 for our branch, your branch. That goes into current year dues because it's July. So the year has already started. And we owe California $20 and national $62. So we're going to increase AA California dues 20, increase AAUW national dues 62. If you have accounting software, you don't need to do the last two steps, but using the spreadsheet example, our excess revenues over expenses, so revenues over expenses increased by $21, and our unrestricted net assets increased by $21. So we're recalculating, and then just as a triple check, total assets are 14,103, total liabilities and net assets are 14,103. What if this were June? What if this happened in June? Could I have tab 7?
Yes.
The only difference in recording this is June, and remember that the dues are for the next year that starts July 1st. So instead of increasing branch dues by the $21, we're going to increase deferred branch dues income. Other than that, it's still $103 increase to cash. We still owe the money to California and to national. But Chris, I don't like owing money. So how do I get rid of this bill?
Okay. All right. Well, that's actually the easy part because you already made the payment through the MSD. Because if you print out when you renew people's membership, it tells you that you owe a total of $82. Remember, because I remember gave us a check for 103, 82 of that belongs to somebody else. So the MSD will enable you to pay with your debit card this $82. So here you see the total down here, and it even splits out how much went to national and how much went to state. So all you need to do is you go and say, oh my gosh, I spent a total of $82. So I better decrease my checking account by $82. So you do that. And then, okay, now I've made an expense. What category does it belong to? Oh, it's these liabilities. I don't owe these guys any more money. So I can decrease my AAU California dues by $20 and my national dues liabilities by $20. So now I don't owe them anything anymore, which is exactly where you want to be because you just passed that money through and you still have your $21 over here. Remember that we already recorded from our part of the branch dues. So the MSD really makes it easy for this particular transaction. Okay, so now we covered the part where somebody gives you a check for all of their dues in your branch. There's another way people pay their dues, which is they go to the national website and they pay them. So Roberta, what happens now? How do you record that in your books?
Well, first of all, you have to figure out what it is. So this was my big mystery for about 3 months when I became treasurer. Money would magically appear in the checking account. I wasn't terribly concerned. I'd rather have unidentified money in than unidentified money out, but it was annoying. Eventually, I figured out it is national sending my branch the share of the dues. So this was for 2 people. And the entry on the checking account is AAUW, do I have my pointer?
Yeah.
AAUW Educational Cash CD, that's what it means. So we are going to increase our cash. We're going to increase our income because this happened in July. If this happened in June, it would go over here to deferred branch dues income. We're going to recalculate excess revenues over expenses, and it goes into unrestricted net assets. You do receive an email a week or so after the deposit telling you that it has been deposited. And there's a way to get on the MSD and determine what members have renewed their membership. So this wraps up the discussion of how to process dues. And I'm sure that there'll just be no questions, so we'll just move forward. That was a joke. So could everybody come back and join us and let's do some questions.
Yes.
Okay. Well, we don't have.
So Dawn, do we have any questions to ask in our Q&A?
Well, we do have some questions, but fortunately for me, Raleigh has been on top of that and answering most of them. Raleigh, I'm wondering if there might be a few that you answered that might be good to share with all the attendees, since not everyone reads all the answers to the Q&As. A couple of them were regarding liabilities in particular, and I'm thinking you might want to share some of the answers that you gave so that everyone else attending can hear them.
Actually, more question. Yeah, okay. One was about liabilities, and that was, I think that there was some confusion about the color coding. I was wondering why sometimes the liability is shown in green.
It would be when it's being increased. It would be green. When it's decreased, it's in red.
And then there was a follow-up question about when would liabilities increase?
Well, I can handle that too. Remember the $103 check that we got, and we owed 62 to National and 20 to California? That's not my branch income. That is a liability, a debt, because we're passing it through, and that's how we get a liability.
And then next, thank you, thanks, Roberta. The next question is, why is a deposit for a venue an asset?
Well, I can take that. It's an asset because you took some of your cash. Imagine that you have $10,000 and you say, I need to buy something with that cash. I'm going to buy a deposit on a venue for next year. And so it's just an asset. It's something you have. And we'll see in the further examples how we're going to spend that asset and turn it into expense when we have our actual event in the following year.
Chris, would we do that for, like, if we bought a book of stamps in June, but had most of them at the end?
No, just for big things. Yeah, that would affect the budget decisions or decisions that your board might want to make for planning. It enables you to keep your income and your expenses in the same year that apply to those activities. And it makes it so much easier to plan and to see whether you're actually doing a good job of managing your money.
Okay, thank you. So another question is, could you go over the process of sending donations to AUW funds to National? And I think that's coming up in the next segment, isn't it?
We're not going to talk about the actual process for transmitting the funds to AAUW. We are going to talk about how to record them in your books, but we can address that offline. I know there's lots of materials on the web on that, but we can search them out and send them to you.
Raleigh, there were two questions that you answered for us that might be of value to other people who are listening. One of them was a question that said, if dues are paid via MPP, do state and national have to be tracked on this form? To which you gave the answer no. Did you want to elaborate on that at all, or that's pretty straightforward?
Okay, which one will, let me see.
It's in the answered. If dues are paid via MPP, do state and national have to be tracked on this form?
Yeah, and so that was the very last slide we saw, where when it's paid by MPP, then you're getting that magical deposit in your account that Roberta was talking about from AUW National. And then in that case, all you see is branch dues, and then you add that branch dues to your dues income. But you don't have to, you never see the state or national dues, and you don't have to worry about it.
And then on the same lines, there was another question that you answered regarding if there's extra money coming in with the dues payment, extra money, how do you allot for that as a liability rather than income or asset? And you stated simply that extra money would be revenue.
Right, like, so sometimes it happens that your dues are, like $103. So then the example was a check, and somebody writes you a check for $120, and they say they don't, so you have a choice of either returning that extra money or using it as a donation, and depending on what the member wants. But if the intent was to use it as a donation for the branch, then it is a revenue for the branch. So the liabilities in it are still like what it is for, like what you owe a state dues and and the part that you owe national, those are the liabilities, but not the extra money that came as just income, as donations. Is there any other comments from Chris?
Yeah, there could, often members will include a donation for Tech Track or for AAUW fund with their membership check. And when that comes to the branch, you would run that through the same liabilities because those are pass-through donations. So I think we even had a sample area in our liabilities where you could say pass-through for AAUW fund. So you just don't want to take them into your account as revenue unless the member really means for them to be for your branch, in which case then it's revenue to you. But if it's for some other fund, then it becomes a liability and is transferred immediately to the other fund. Is that your understanding, Raleigh?
Yeah, yeah.
Good.
Okay.
And that's
So,
pretty common. That happens a lot.
yeah, yeah. I think maybe at this time, let's carry on with the materials now. I think we've covered a big section of the questions, and then, then we'll wait till the next break.
Okay. All right, so our next section, we've talked a lot about dues. Let's talk about events because that's the other big part of tracking for your job. So we're going to do a couple of examples. The first one is a member event where you're not doing any fundraising. So this is something like in our branch, we have a September brunch where we sell tickets to a beautiful, country club brunch, and we have expenses of the brunch, and we just really try to break even on it. There's no fundraising. We might have a speaker. So we have some expenses, but it's this is an example of an event like that, where it's really for your members. So in this case, we've got an example of our luncheon where we're going to sell $3,000 worth of tickets. So here we see that up here. And we're going to have $2,700 of expenses. So we're going to actually come out $300 to the good on this, which is pretty good. So what I like to think about this, the easiest way for me is first I record the income and then the expenses. So let's record the income. We wrote a check. Actually, we increased our income, we had expenses of, I'm sorry, let me back up. We got $3,000 from our members. We sold $3,000 worth of tickets. So we're going to increase our checking account by $3,000. So I'm showing that up here. And that's the amount of our ticket sales. So now we've increased our checking account. What category is that going to be in? Well, it's an event for this year. So let's put it, it's going to be over here. It's income, isn't it? It's operating income. It's not having to do with fundraising. It's just for our branch. So member event income goes up by $3,000. Okay, so that's handled. We got the $3,000 in and we categorized it. Okay, so now let's talk about our expenses. Well, here's where we can see what happens with our deposit, because last year we took some of our cash and we bought a deposit. Now we're going to spend that. So what we can do is reduce our venue deposit because we're going to expend it, and we're going to move it over here and count it as an operating expense. So now we have no more deposit, but we got a head start on our expenses. So the other thing that we said here, we said we had a total of $2,700 in expenses. So we had an additional $1,200 that we spent on various things for our event. So we have to write a check for that. So here's our minus $1,200. We wrote a check for it. Now, where does that fall? Well, it's an expense, right? So it goes over here. It adds to our venue deposit. So our total expenses come out to be $2,700 right over here. So here you see that. So now we take our $3,000 minus our $2,700, and we've just changed our profit here, our excess revenue over expense. We've generated $300. And since this is for the branch, it's just going to go, it's not for a fund. We're going to increase our unrestricted net assets by $300 because we just earned some new money. Now, if you have, as Roberta said, if you have accounting software, you don't have to do these recalculations, but it's really good, I think, for you to understand what is going on with the software. So now that's just if we sold tickets for an event. I hope that that's pretty clear. So now let's talk about what if we have a fundraiser? Now the plot thickens. So now let's take this example where we're going to sell $2,000 worth of tickets, and we're going to have a raffle where we're going to sell $500 worth of raffle tickets. So our total income is going to be $2,500. Okay, so let's take our $2,500 into our checking account up here. And now we have two things that this is related to, right? It's not only the tickets, it's the raffle. So let's look over here how we categorize that. We record $2,000 over here as ticket sales and local scholarships, because this is fundraising income. Remember, now we're raising this for local scholarships. And we're going to actually increase our raffle for local scholarships income by $500. The reason that you want to keep the raffles separately is because at the end of the year, you need to make a report to the Department of Justice of all the money you earned with raffles. So always keep those separate. And they have all sorts of tax implications and such also. So the watchword here is make a separate account for your raffles. So now we've accounted for our entire income of $2,500 up here. See, here it is, total $2,500. Now, what about our expenses? Well, we had only $250 of expenses. That's pretty darn good. So we had, let's decrease our checking account by $2,500 because we had to spend that money. So our total assets are going to go up by $2,250. And we have these expenses. So how are we going to record them? What are they? So let's look over here, fundraising expenses, because they're for our local scholarship fundraising. And we're going to say, oh, we spent $230 of it was for our speaker and some other expenses that we might have had. And we also spent $20 on our raffle items. So our total expenses were $250. So now we've got our $2,500 of total revenues, $250 worth of expenses. So we have earned $2,250 for our local scholarship fund, which is just fantastic. So now here's, instead of, since this is, we don't want to add this to unrestricted net assets because we're not at liberty to spend that however we want. We need to add that to our restricted net assets. In fact, specifically to the local scholarships. So we increase that by $2,250. And this is not something that will automatically happen with your software. If you're using QuickBooks or Quicken, you will need to manually move this amount from unrestricted to a restricted net assets because it doesn't know what you raised money for. But this is a very important thing for you to do because now you know how much money you have to award to your local scholars. You now have $2,250 for them. So that's very exciting. So now that we have this money, the fun can begin. Now we can actually award it, right? Oh no, I'm sorry. We're not quite ready for that. First, we're going to talk about taxes. We'll get back to the fun part later. So Roberta, let me give you remote. Okay, take over. Can you click your clicker and see if you're...
I liked your first idea. Let's skip this and go to the last one.
Well, this is the fun part.
I clearly drew the short straw on this. I got lost in the weeds reading all of the verbiage over here. So I decided I'd make a chart. And I will do my best to explain the tax deductibility of all of these different types of situations. It's going to depend on what your branch is. We'll come back to that, who the beneficiary of your fundraiser is, and the donation type. I want to start with a couple that are the same, no matter what kind of branch you have and who the beneficiary is. So direct donations to beneficiaries are deductible. Direct donations, that means the money doesn't come to the branch. That means my member writes a check to the Tech Trek SPF. It doesn't matter what we are, as long as that check goes straight to the beneficiary, that's a 501c3. We're going to come back to that in a minute. It's deductible. If it's a raffle, no deduction, no matter what. There are just flat out no deductions for any raffles. Okay, maybe we should draw a thick line right here because now we care about these things. Most branches are 501c4s. They become that way when they're born and affiliated with AAW National. About a third of the branches have gone through the process of applying to the IRS to become a 501c3. Kind of the overview advantage is that donations made to a 501c3 are deductible. Donations to a 501c4 are not deductible. So let's do this 501c3 thing first. Again, donations to a branch that is a 501c3. And by the way, it might be that you don't know what your branch is. You know, sometimes you just kind of inherit these jobs by default. So down here at the bottom, there's a little blurb on how you can actually go to the IRS website, and it's not too difficult, and figure out whether your branch is a 501c3 or 4. If it's a 501c3, the money's coming into the branch. First of all, if it's sent to another one, of course, raffles no, and then yes, yes, yes. And I'll let you read these columns. If your branch is a 501c4, about 2/3 of our branches in California are, if they're doing fundraising for AAUW funds, that's the exception to the rule. The money can actually come into the branch, and as long as it's forwarded within the same year that it is received, the donor gets a deduction for it. If AAUW funds is not the beneficiary of your fundraiser, so we are talking about now, remember we've got a dark line here, so we're just looking at this stuff right here. Money's coming into the branch is a 501c4, there is no deduction for anything. Excuse me, the big red no is the issue that most branches have that are 501c4s. They're going to hold a fundraiser, Chris's fundraiser for local scholarships, and they're selling tickets and they're running the show and the money's coming to the branch. If it had been a 501c3, the person buying that ticket would get to deduct the difference between what they paid for it and what they received in return, the value of the brunch, the value of the gift basket, whatever. If it's a 501c4 and the branch is handling the money, there's no deduction for the people buying the tickets. Now, I mean, it may not matter. Maybe it doesn't matter to the members. Maybe it's not enough to worry about, but this is kind of the issue right here. Unless you have a third-party 501c3 that's collecting the money and paying the expenses, this branch is not going to get a deduction, or you're not going to get a deduction for the ticket that you bought to go to the garden club. Chris, it's been my experience that fundraisers, the income and expenses span several months. The accounting is tough. Is there some way we can track all of this easily?
I'm so glad you asked, Roberta. This is one of the things that really will be helpful to you as a treasurer is to use a tool called a net sheet. And different branches, different people are responsible for preparing these. I know in our branch, the chair of the event prepares the net sheet. And then as a treasurer, I would enter the aggregate amounts. But someone in your branch needs to do this so that you can understand exactly the success of your event, how much it's going to cost you, how much you can generate, and you can plan appropriately for the following year. It's also extremely important if you are among branches who are able to offer tax deductibility to their donors. So let's take a look at what we've got here. This is an example on the left here of a garden tour. And we've got a chairperson, and we're going to benefit local scholarships out of our branch, not a third party. So the money's going to come into the branch, we're going to pay it out. Nobody's getting any tax deductions for this particular event. Unless you're a 501c3, in which case you could. So then we'll talk about this tax deductibility. So the first column you see here is your budget. So you should always start with a budget for your event. So this is the same example we looked at before. So you'll recognize these numbers. We thought we were going to sell $3,000 in revenue. We were going to have, sell some tickets, have some advertising, have a raffle. And we had some expenses. We had some speakers, raffle expenses and brochures. So we thought we were going to earn about $2,700 from this event. So now if I'm a 501c3, part of my ticket is tax deductible. Well, how much would be tax deductible? How do you figure that out? Here's one way to do it. You write your budget here in this first column. And then what you're trying to figure out is how much of this ticket is actually going to go to the project. So you don't care about advertising revenues, you cross that out. You don't care about the raffle because that's never tax deductible. So the total amount that you're going to send to your charity is going to be, or the income, sorry, that you have collected is $2,000 for tickets. And then the things that relate to the tickets, what the expenses associated with buying a ticket are the speaker expenses, for example, not the raffle baskets, because that's a raffle expense. Any brochures, though, are an expense for the tickets. So you have maybe $270 total expenses related to tickets, not about raffle or other income or anything else. So you say your net amount that you're gaining from your ticket sales is $1,730. So 2,000 minus 270. So if we look up here, our plan was to sell 100 tickets at $20 a piece. So we're going to send $1,730 to our fund from 100 tickets. So 1,730 divided by 100 is $17. So for every ticket you sell, you're going to have a tax deductibility of $17. So that's one way of figuring it out. So another thing just to notice about this worksheet is after you've had your event, you can go back and fill in the actuals. And so again, you can, in this case, we earned $2,000 from the event and $500 from the raffle, a little less than we thought. We earned, our expenses were $230 plus $20, so also less than we thought, $250. So we ended up earning $2,250 for our local scholars. One thing to check that I didn't mention earlier is when you're planning your raffle, you have to make sure that the expenses associated with your raffle are no more than 10% of the amount of tickets in total you intend to sell. So in this case, and you go work from your budget on that. So here, $30 out of 700 is about 4%. So we're fine there. But be sure and keep that in mind when you're planning your raffles, because it's a Department of Justice rule that you really cannot exceed 10% of the proceeds in your expenses for your raffles. Okay, so now we have $2,250 to spend. Roberta, how do we do this? What do we do now?
Thank you. Well, this is the fun part. We have 3 stellar scholarship winners, and we're going to write them checks. So we're going to decrease cash by $2,250. And we are now in this area of the statement of activities. Local scholarships funded, $2,250. This is going to reduce our excess revenues over expenses by $2,250. And then notice this, remember when we made the $2,250, Chris put that $2,250 into local scholarships. It's an obligation that we have to fulfill. So we are going to reduce that obligation by $2,250. I think that kind of wraps up recording events. So let's take some more questions, please.
Okay, there were lots of questions. Let me see.
I saw one on a chat that I can answer real quick. I think they wanted to know what we should have those columns where the changes were made, and I just had it as changes.
Okay.
Okay.
There was one question here, if there is a donation for AAUW funds, not branch, then is that a liability?
Yes,
If a donation is,
yes, it's not come to you, it's passed through to AAUW fund, the
if the
donation.
check is made out to AAUW funds directly, then of course it doesn't even come through the bank account.
Right. Yeah, what we like to do is we ask our members if they're going to make a donation to AAUW fund, that they write the check to AAUW fund, then they send it to our fund chair. So that way the chair knows that they donated and can make sure that it gets attributed to the proper branch. But of course, lots of donations are made online too, which we don't know about. And we'll talk a little bit later about how to know where that money, how to account for that.
Okay, then one question was how do you document where money came from on these spreadsheets? For example, donation from Mary Smith in honor of Karen Jones.
Well, they don't, you can make, it depends on how detailed a record you want to do. In our branch, I usually write it in the memo line when it's a check. And I just like in your checkbook, you deposit the amount, say donation for Mary Jones for such and such. So it doesn't, it gets aggregated when it appears on your financial statements, but it's in your records of your check register.
I'd like to add a little bit to that. If it's a donation to a 501c3, you need to keep track of donations by donor because any single donation of $250 or more needs a written acknowledgement. Those are IRS terms in order for the donor to deduct it. So you need to, if it's a 501c3, there's a little more record keeping to the donation arena.
Okay, thank you. There's another question now, I think switching gears a bit. Is auction income different from raffle?
Yes, isn't it? I don't think auction is a raffle. That's just a fundraising activity.
Oh,
right?
silent auction, is that what you're talking about?
I
The
guess
auction.
it doesn't mention specifically, but let's take
It's not like a raffle in that if I bid $500, excuse me, for something that's got a value. In fact, I just did this. I bid $200 for piano lessons for my granddaughter that were worth $120. If it's a 501c3 that's getting the money, then I would get a deduction for the difference between what I paid for it and what it was worth. And if I'm the donor, I'm the piano teacher and I'm, let's make it a work of art, then I get to deduct the lesser of the basis or the fair market value. That's on that donation chart.
Mhm.
Raleigh, we had a question earlier about investment accounts and where they're tracked. This person says theirs is separate from our checking account. They're held at a brokerage. We paid college grants from this fund. And then a follow-up question on that was, where are transfers from an investment account at a brokerage tracked?
Roberta, you want to take, it would be another asset account, right? Like,
Yeah, it would be an asset, and
savings. Yeah.
and as you earn, let's say, interest, then it would go into interest income, which would be a revenue account on the statement of activities.
Mhm.
Okay, and respecting the time, we need to probably move forward to the next section. And just a reminder that we will be answering any Q&A questions after the fact, after the webinar, and they'll be posted on the website. So if your question doesn't get answered here, don't worry, it'll get answered later.
Do I have control? Yeah. I don't, oh, well. There we go. Oops. No, we need to go back to tab 15. There we go. This is about reconciling your bank statement. This is something that you should do every month, and it should be done before you generate your reports at the end of a period. You should first print all bank statements, mark items in the check register that have cleared the bank, and enter in the check register any valid entries on the bank statement that are not in the checking account, the check register, such as bank charges, deposits from National for dues. And then you adjust the bank balance in the check register for outstanding checks that have not cleared the bank. For example, check number 200 here has not cleared the bank. The adjusted bank balance and check register should then agree to reconcile the bank account over here. We subtract the amount of the outstanding check, which is $2,250 from the bank statement balance, and we come up with our adjusted bank balance of $9,863. And this agrees with our check register balance, so we are good. Now Kathy is going to show us how to do the month-end activity report at tab 16.
Okay, now a month has gone by and you are ready to prepare 3 reports to show: 1, the month-end activity, which is this tab, the actual to budget, the next tab, and the funds report, the tab after that. Your board may want to see 1 or more of these reports each month. As Barbara noted, it's a best practice to send the reports to board members prior to the board meeting. So let's talk about the first set of reports, the statement of activities and the statement of financial position. The monthly report of activities shows what happened during the period. In our example, it's the first month of the year. 2 revenues, expenses, and net revenues over expenses. The report should show all the categories of revenues and expenses that you budgeted for, because these are the lines that you're tracking. The statement of financial position shows assets, liabilities, and none at this time, and total net assets, and you can see they equal. The statement of position is comparing 2 dates, the beginning of the month, the end of the month, and the change that resulted from that period's statement of activities. Remember, an increase in net assets is equal to the excess of revenues over expenses, as you can see here. Now, if expenses exceeded revenues, net assets would decrease by the same amount. The important part of this month-end activity report, it's a tool for branch treasurer to make sure that all income, expenses, and other transactions are included for that month. And you would have seen some of them when you reconciled your bank account. The financial position report includes appropriate entries such as deferred branch dues, revenues, and prepaid expenses, and the 2 reports tie out. The treasurer goes through this process each month. If the treasurer does that, it should minimize unrecorded activity and ensure that year-to-date statements are accurate. So be sure to validate your entries by checking these sums: the excess of revenues over expense equals total revenues minus total expenses. The excess of revenue over expenses equals the change in net assets, and total assets equals total liabilities plus total net assets, and they do here. So you can see the checksum validation here. So now Barbara will talk about the budget versus actual report.
Okay, this is the budget report that would be submitted monthly to the board to inform them of the progress of the actual operating revenues and expenses compared to the budget. It would be helpful to email this report in advance of the board meeting with any comments about dues and fundraising progress compared to last year. In this example, we have reports of expenses and income only for the first month of the fiscal year to compare to budgeted amounts. Later in the year, this report would provide a good check to see if any changes are necessary. And now Kathy will tell us about branch funds report at tab 18.
Okay, the branch funds report is a very important report as it keeps track of all the funds your branch is generating. Not only the funds raised and deposited to the branch bank accounts, but also the funds collected and deposited by SPF and Tech Trek camp treasurers for your branch camp scholarships. You can see the funds report has a column marked internal, for funds the branch receives directly and are recorded in the branch bank accounts, and a column marked external for funds that have been raised by the branch but are collected by AAUW national funds, Tech Trek treasurers, and SPF. It's important to check all external reports to make sure all known donations are recorded there. Your sources for information for funds received outside your branch are the Membership Service Database, MSD, for AUW national funds. It's important to check this report against your list of known amounts sent to AUW funds. The Tech Trek Camp Treasurers reports, you should check the Camp Treasurers reports against the deposit forms used to send donations to the Tech Trek treasurers, camp treasurers. Branches can have separate Tech Trek treasurer who can provide accounting for donations received and sent to the Tech Trek camp treasurers. So you also have Tech Trek SPF account report. This can include donor checks sent directly to SPF or paid online. So be sure to record these in your list of Tech Trek donations. And if a donor advises you that they will be making a donation this way or via their broker or stock donation, be sure to follow up and make sure it is reported on the Tech Trek SPF account report. Special projects funds reports other than Tech Trek that are accepted by and accounted for by SPF. If your branch has a special project with AEUW California SPF, the SPF treasurer will send quarterly financial reports to the project director appointed by your branch. Donations reported by the SPF treasurer should be included in your branch reports of your branch project. And there can be timing differences. As you can see, the quarterly reports come 60 days after quarter end. Not a lot of branches do this, but if you're a 501c4 and you want to raise funds for a project and allow the donors to get a tax donation, if you turn over the financial financial fiduciary liabilities over to SPF and they're handling it, they are receiving the funds, and that will maintain that tax deductibility. So now we're going to look at our year in financial report, tab 19. So here every month you have been doing your monthly reports and reconciling the bank accounts, checking for external funds, doing all of that activity. And now you're at year end. Our example here is for a branch that has a 501c3 tax status, so donations to the branch are tax deductible. More about that later. These are the same reports you've been providing all year, but this time the comparison to budget is annual for actual and budget. For our example, we have a list of transactions, additional transactions beyond month one. There's been another venue deposit for next year's member activity, the receipt of additional branch dues for the current year. There is directory advertising income and the receipt of deferred branch dues income for the next year, and additional administrative expenses for the directory and for software purchase. There, as you can see, there was $10,000 of funds raised for Tech Trek, the payment of $9,500 in Tech Trek funds for camp scholarships, and the retention of $500 raised in parent fees. These funds have been collected and dispersed through the branch cash accounts and are still tax deductible by the donors because the branch is a 501c3 organization. If it was a 501c4 organization, the $9,500 from donors should be made payable to AAUW California SPF, and the payments would be sent to the Tech Trek camp treasurers in order to qualify the donations as tax deductible. The donations would then be reported as external activity on the funds report. Again, if we look at this, the excess of revenues over expenditures right here is equal to the change in net assets, right here on actual, to the actual change in net assets. If a branch decided to use these funds for additional scholarships or other projects, net assets could actually decrease in a year where the branch used cumulative funds as well as all of current year income. You can look at it, this has at the end of the year, 17,250 in total net assets. As seen in the month-end report, you can reconcile beginning to ending cash by adjusting the excess revenues over expenses by looking at the changes in assets and liabilities, the venue deposit and the deferred branch dues. So we started out with a beginning balance of $8,000 in cash. Our income was $5,250. However, we had a couple of transactions that occurred that weren't affecting cash for the current year activity. The prepaid expense change, it cost us $200 more to make that reservation and hold that space for our next year's member events. So that decreased cash by $200 in the current year. But we must have had a really good membership drive because our membership dues received for next year was $950 higher. So it didn't affect our excess revenues over expenses for this year, but it did affect our cash. So the net change is $6,000 and our ending balance is $14,000. Be sure you perform your checksums as we went over here to make sure you've got all the activity, you've recorded all activity that has gone through your accounts in adjustments to your balance sheet, because you want this report to be accurate. It will become the basis of any of your information and tax filing. So you want to make sure you've captured everything on this. So now we talked about our year-end report in comparison to budget. Barbara will talk about budgeting for next year.
Okay, the budget creation process varies with the size of the branch. In larger branches, there may be a budget committee that includes the president and chairs who are responsible for the larger programs. Many branches use their outgoing board to create a preliminary budget that is then adjusted by the incoming board. It should be remembered that the entire board has a fiduciary responsibility for the income and expenses of the branch. So in formulating the budget, we look at, I don't know why I don't have the hand. Oops, can you take me back, Chris? Okay, so there I have the hand. We look at the previous 2 years' activities budgets because it's helpful to see what a quote normal year looks like of activities. And of course, this has not been a normal year. Then you need to list your assumptions of what will change and what might remain the same for the coming year. The example budget set out here at tab 20 is for a 501c3 branch, which can hold tax deductible donations to Tech Trek, et cetera. But we've already been through how you pass through if you're a 501c4 branch. In this sample budget, we assume that membership will stay flat and there will be no change in dues. Directory advertising income will weaken due to COVID, but there will be different fundraising events that will bring in more income. You also need to consider possible increases in expenses such as Tech Trek fees. When finished, you should total up the revenues and expenses. In this example, the revenues exceed expenses by $3,150. And it's really fine to leave that as unprogrammed funds because you often need to accommodate for unanticipated changes in programs throughout the year. That pretty much encapsulates budget creation. It's very helpful to work with the past 2 years as a framework. So now back to Rolly.
Okay, I'll be talking about taxes. So let's see. So taxes have been covered on tab 21 of the guide, and they are also available on our website on this page on financial documents and deadlines. Under branch tools, you go to branch and IBC finance, and then go to financial documents and deadlines. We don't have a lot of time. I'll quickly go over some of the main things, and we're thinking of doing a webinar in the September timeframe, which is devoted more to taxes. One of the things to know, the first thing to know is that the AUW year begins July 1st and ends on June 30th. And most branches have their financial year, which is in sync with that. However, if a branch has a different financial year, for instance, starting January 1 and going to December 31, then the deadlines for filings become different. So normal AUW financial year, the deadlines for filings, most of them are November 15, except when you use MSD, and that's October 15, and I'll go over that. So let me go over some points here. All tax filings and reporting are the same for, let me see, yeah, that's fine. All filings and reportings are the same for 501c3 as well as 501c4 branches. The main difference that's made is if you have $50,000 or less in revenue or more than that. Now, you can get, yeah, let's stop there, please, Tracy. So we'll talk about IRS filing. In order to file your IRS, you need the federal ID. If your income is 50,000 or less, then you have two choices. The easiest is to go to let National do your filing for you. You go to the member services database and just, so that's where you record that you want National to file it, and there's the link for it. If you wish to file it yourself, there is a postcard, e-postcard, which is 990N, and there is a link available to get that form. The deadline, if you're doing that, is November 15. If your income is above $50,000, then you do have to do the filing yourself. National cannot do it for you. And then you will need form either 990 EZ or 990, depending on whether your income is below 200,000 or above that. So then next we come to state filings, which is with the California Franchise Tax Board. And the form there, if it is 50,000 or less, is 199N. And this you do have to, branches do need to do this yourself. National will not do this for you. And the deadline for that is November 15. This is an electronic filing. So you have to, if you see the link below, it takes you to the Franchise Tax Board website. Now, in order to do this filing, your branch needs to have its FTB number, or the Franchise Tax Board number. I have a list of, for many branches, I have their federal IDs and FTB numbers. So in case you didn't get it from your predecessor or don't know, just check with me. It's possible that I can give you that information. Besides then the national and state filings, there are Attorney General's office has forms to be filled out. So there is this new form called the Treasurer Report form, or the CTTR1 form, which became a requirement starting last year. And the interesting thing is this form is actually required for those branches that have income 50,000 or less, because these branches are not filling out the full 990 or 990 easy. And so the state wants some of the information that would have been filled out on that form. So there is a link for that, the CTTR1 available. And the deadline for that is also November 15. Another form that has to be filled out for the Attorney General's office is the registration renewal form, or RRF1. This of course, you've probably been filling out in the past as well. And once again, this is all branches need to do this, whether you're 501c3 or 501c4. Wanted to make a few comments on the RRF1 form. Since last year, it has changed a bit. And so there are some additional fields for information on revenue and expenses, which have to be copied from the CTTR1 form. There is also one question on this form about does your branch audit its finances, or are its finances audited? And that is confusing for people. The answer for that for most branches is going to be no. Even if you are doing financial reviews, an audit is a different, much more in-depth process, and there is no need for that unless the income is over $750,000. Finally, there is this form, Statement of Information 100, or the SI 100. And this form is needed only by incorporated branches, and it needs to be filed every 2 years. And this has a list of branch officers. That's what that is about. And there is a link provided for that form below. So that is a very quick description of what is needed. Also, if you go through this, the website, you have a lot of links. There's a lot of information available under the branch and IBC Finance. Also, if you look at tab 22 of the accounting guide, that has a lot of links and who to contact information. At this time, given the few minutes we have left, let's take a few more questions.
We've had 3 questions regarding the 10% rule for raffles. Well, 2 questions and a comment reminding people that they need to file a raffle registration with the state before holding a raffle. But there are a couple of questions asking for clarification about the 10% rule for raffles.
As I tried to point out in the example, if you spend $30 buying a basket that you then raffle, it has to be, you have to actually take in $30 can be no more than 10% of your, or no, did I say that backwards? It can be, you can't have too much expense in your raffle. It can only be 10% of your tickets that you sold. So if you sold $100 worth of raffle tickets, what you're raffling off can't cost anything more than $10. Is that right, Roberta?
Yeah, and I think that also includes, like, you have to go buy the raffle tickets, actually. You know, the things that you tear off and,
Some smaller expenses, yeah.
Thank you. So we've had a couple of questions of people who are looking for templates, a sample chart of accounts for a 501c4 branch that uses QuickBooks. That would be very helpful. Do you have an Excel sheet set up with the basics for us to use and revise as needed? And then similarly, it would be helpful to have the sheets for 501c4 since that's what most branches are. So there's some questions regarding the need for some templates and where those might be available.
Okay, let me take that. So there is a template which has been provided on, on the page with the information for this webinar. And so that has been developed based on the materials. So take a look at that. That will help you get started. What were the other questions?
Okay, thank you. This may be a common question that someone said, we've been told that we can't change the budget once the year is underway. Can we?
I don't know why we can't.
Yeah. I mean, typically the budget is the budget, but that doesn't mean you can't spend more than what's in the budget. The board can approve it. The budget is a plan, and you try to hit your plan. And if you're going to do something different than your plan, your board needs to approve that. So that's how we handle it in our branch. We try to do our best plan, but we don't always do what we plan. So our board says, oh, we're going to do something different. We'll keep the same budget, but we're going to allow this variance.
That's what we do.
Okay. And then, excuse me. And then another general question, broad question is,